In 1980, silver hit $50 an ounce, then crashed 90% in a matter of months, bankrupting some of America's wealthiest investors. In 2011, it hit $49, then crashed 30% in just 5 days, wiping out billions in paper profits. In 2021, an army of Reddit investors tried to squeeze it to the moon, and the whole thing fizzled within weeks. Right now, as I'm recording this on December 10, 2025, silver just shattered every record in history, $61.86 per ounce. That's not just a new high, that's uncharted territory. But here's where it gets insane. China is airlifting silver across continents. 660 tons in October alone, loaded onto cargo planes from Shanghai to London because the vaults are running dry. The Fed just cut rates today, and social media is exploding with predictions of $80, $100, even higher. If you invested $10,000 in silver on January 1st this year, you'd be sitting on $19,000 right now. That's a 100% gain. So, here's the question everyone's asking. Is this the boy who cried wolf? Or is the wolf finally here? I've seen this movie before, 3 times actually, and every single time it ended in disaster. Until maybe now, that's what we're going to figure out. This isn't financial advice, this is education. And by the end of this video, you'll know exactly how to think about what comes next. Let's dive in. Our story begins in the 1970s with 3 brothers from Texas, the Hunts. The economy was a mess, inflation was at 13%, and chaos was everywhere. The Hunt brothers decided paper money was doomed. They needed silver. In 1973, they started buying at $3 per ounce. But it became an attempt to corner the entire market. By 1979, they controlled over 100 million ounces, roughly 1/3 of the global supply. Think about the audacity. 3 individuals controlled more silver than most governments. And here's what happened. January 1979, silver was at $6 per ounce. January 1980, silver hit $50, a 700% increase in just 12 months. Then regulators stepped in. The real collapse came on March 27, 1980, a day known forever as Silver Thursday. The Hunts had been using massive leverage, borrowed money. As prices fell, they faced margin calls they couldn't meet. On March 27th, they failed to meet a $100 million margin call, and the market imploded. Silver crashed over 50% in just 4 days. The Hunt brothers lost $1.7 billion almost overnight and filed for bankruptcy. Silver itself crashed 90% from its peak. The lesson: you cannot manipulate markets. Now, you might think, surely we've learned something. We haven't. Fast forward to 2011. The world was reeling from the 2008 financial crisis. The Fed was printing trillions. Silver went from $30 to almost $50 in just 4 months. This time is different, everyone said. Then on May 1st, it all fell apart. Silver crashed 30% in 5 days. Over the next 4 years, it fell to $14, a 71% decline. If you bought at the top, you didn't see those prices again until 2024. That's a 13-year wait. The lesson: if it's mostly speculation, the collapse is swift. Now, 2021. This one's even more pathetic. Reddit's Wall Street bits, fresh off their GameStop victory, turned to silver. Silver squeeze. The price jumped from $25 to $30, and then fell right back down to $26 within a week. The squeeze fizzled in days. Why? GameStop was a small company. Silver is a $1.5 trillion annual market. It's too big. The lesson: you can't manufacture a squeeze through social media hype alone. So there you have it. 1980. Manipulation. 90% crash. 2011. Speculation. 70% crash. 2021. Social media hype. Immediate failure. Which brings us back to today. December 2025. Silver at all-time highs. Are we just repeating history? Or is something fundamentally different this time? Let's find out. Look at the pattern. 1980 was driven by manipulation, 2011 by speculation, 2021 by Reddit hype, and now, 2025 is driven by an actual supply shortage. That's the difference. Every other time, it was smoke and mirrors. This time, there's no silver in the vaults. For the past 5 consecutive years, the global silver market has been in deficit. Demand has exceeded supply every single year since 2020. The 2025 projected deficit, the largest on record. The 7-year cumulative deficit is over 1.2 billion ounces. More than a billion ounces of silver have been consumed beyond what was produced. Where did it come from? Existing stockpiles. And those stockpiles are now running dangerously low. Meanwhile, mine production has declined. Why? About 70% of silver comes as a byproduct of mining copper, zinc, and lead. You can't just turn on silver production like a faucet. But here's the most important shift, and this is what makes 2025 completely different. Industrial demand now accounts for over 60% of silver consumption. This isn't jewelry or speculation. This is the infrastructure of the 21st century economy. 3 forces are devouring silver. 1. Solar panels. 20% of all global silver is going into solar this year alone. China produces over 90% of the world's solar panels, and once that silver is in a panel, it's effectively gone for 25 years. 2. Electric vehicles. Each EV uses 2 to 3 times more silver than a gas car. With 20 million EVs projected for 2025, that's hundreds of millions of ounces going into vehicles. 3. AI data centers. Every new AI cluster, every 5G tower, every chip fabrication plant, they all require silver. This industrial demand is not speculative. It's not going away, it's structural, persistent demand. There's no good replacement for silver in most of these applications. This is real. Remember that airlift I mentioned. London's precious metals vaults were running so low, they had to airlift massive quantities from China just to prevent a breakdown. When the world's largest financial centers are cargo planing metal across continents in an emergency, that's a crisis. The Shanghai vaults have plummeted to their lowest level since 2015. The silver market has been in backwardation, meaning people are paying more to get silver right now than in the future. That's acute scarcity, that's panic. So, let me summarize the core distinction. Previous rallies were driven by things that could be reversed. The 2025 rally is driven by a mathematical reality. Demand exceeds supply, and the deficit is structural. In the past, smart money was selling into the hype. In 2025, smart money is dealing with a procurement problem. Industrial users genuinely need the metal. That's not hype, that's supply and demand. Now, before you think I'm telling you to rush out and buy silver, let me pump the brakes. Even fundamentally driven rallies can correct sharply. Silver is up 100% in 1 year. A 15 to 20% pullback from $60 would take us back to around 50. That would be painful. Here are the 3 ways this could still blow up. 1. A recession kills industrial demand. If the economy tanks, demand for solar panels and EVs craters. We saw this in 2008 when silver crashed from $20 to $9. 2. Regulators step in. If banks holding short positions face stress, regulators will intervene with rule changes, just like in 1980 and 2011, and high prices cure high prices. At $60 an ounce, mining becomes very profitable, and supply will eventually respond. 3. You panic. A 20% correction will shake out everyone who bought on FOMO. Many investors are sitting on double their money, and the temptation to take profits is enormous. So, let's return to where we started. Is the vault finally here? Based on everything we've examined, my assessment is this. This time, the fundamentals are real. The 2025 silver rally is driven by a genuine, multi-year structural supply deficit. The VULF is real this time, the shortage is real. The industrial demand is real. But, and this is critical, real doesn't mean risk-free. Just because the fundamentals support higher prices doesn't mean we won't see painful corrections. Markets don't care about your cost basis. Even if silver reaches $80 or $90, the path there will likely include a 20% correction that tests conviction. Here's what sets TOTA 5 apart. This time, industrial companies need silver for their production lines. They can't just wait it out. You can't manufacture 200 million ounces of silver for solar panels if it doesn't exist. So, what should you do? Watch the key indicators. Shanghai inventory levels, solar panel production data, Fed policy signals, and COMEX registered inventories. For long-term holders, if you believe the thesis, volatility is noise. For traders, use tight stop losses. For those on the sidelines, waiting for a pullback might be wise. A correction to the $48 to $52 range would offer a better risk-reward. I'll leave you with this. Economist John Maynard Keynes said, "Markets can stay irrational longer than you can stay solvent." The VULF might be real, but that doesn't mean you won't get bitten if you're not careful. You can be right about the fundamentals and still lose money if your timing is wrong or you panic. The question ain't whether the supply crisis is real. It is. The question is whether you can handle the volatility on the way up. The VULF is here. Just don't let him eat you. Thanks for watching, and I'll see you in the next video.